Hello and welcome to the look ahead for Tuesday, the 24th of June with me, Fiona Cincotta, Senior Market Analyst at City Index. So tomorrow to kick off in the European session, we've got German IFO economic sentiment. Also have plenty of Bank of England speakers. In the US session, we've got the Canadian inflation data and also in the US, the main event, which will be Federal Reserve Chair Jerome Powell testifying before Congress. Now, this testimony, biannual, comes just after the Federal Reserve interest rate decision last week, where the Fed left interest rates unchanged. But Federal Reserve Chair Jerome Powell raised, also highlighted expectations of higher inflation as we push across the year. Now, the Federal Reserve Chair, Jerome Powell, is going to face probably some tough questioning, particularly from those Republicans who believe that he should be cutting interest rates in line with Trump's demands. However, Chair Powell is probably going to stick to the stance that the Fed will remain data dependent, and also that, we're still expecting to see that inflation tick higher. There's been no evidence of it so far, really. We've also seen PMI data today from the US, which came in stronger than expected. So the US economy is proving to be resilient. Let's just bring up here, this is the S&P 500 that we're looking at. The S&P 500 has recovered from that low that we saw in April of 4,800. We rose to that high just earlier this month of 6,069, just below 6,070. But we have actually seen the price ease down. Now, interestingly, this support here at 59.20 has so far held. We're just testing around the 20 SMA as well, still below that 6,000, but only just. So we're seeing a little bit of consolidation really around these levels. Now, if we hear Jerome Powell sounding a little bit more relaxed about inflation, which points to more rate cuts, then we could find that we get a boost from the in US stocks. We have seen a couple of Fed officials supporting a slightly more relaxed stance, including we saw Governor Christopher Waller at the end of last week supporting potentially even a July cut. So yeah, the market's going to be watching, but it is still only a few days since the interest rate decision. So, well, I suppose a lot's changed since then, given that we've seen the US attack Iran. But so as far as the near-term outlook is concerned, then we may not see a massive deviation from what we had last week. Talking about geopolitical tensions, obviously they're going to remain front and central. If there's any retaliation from Iran, then that is likely to dominate headlines and market direction. Just as far as the what else we'll be watching for, we've got the German IFO economic sentiment. It's expected to improve up to 88.3 from 87.5. The data will come after the German composite PMI. It actually came in better than expected today at 50.4, up from 48.5. So definitely we're seeing those signs of green shoots of recovery in the German economy after years of stagnation. However, that's obviously very fragile recovery that we're looking at. This is the DAX. The DAX had rallied up to a record high there of 24,490 just at the start of this month, has been falling down since. It's taken out this support here, which is now what we're looking at as resistance around the 23,350, which was the high from March. That's the level that buyers are going to need to get back over in order to negate that downtrend. Just testing the 50 SMA as well as the 23,000 level. So if sellers can break below that, then we could actually see a deeper decline towards that 22,500. Should we see that level hold, if we get stronger than expected data, if there's a de-escalation in the Middle East, then we could see the price push above that 23,350 level. Also, just talking about, we've got Bank of England speakers. Now, obviously, we had the Bank of England interest rate decision last week as well. The central bank left interest rates unchanged as expected, but the vote was a little bit more dovish with David Ramsden, who will be speaking tomorrow. One of the voters or one of the officials which caught the market off guard with his vote to cut. So it'll be interesting to see what he has to say. Look, just having a look here, this is sterling US dollar. We've seen a recovery in the pound. It's managed to push over that 135 level. And we're just finding it capped on the upside by the 50 SMA, which, sorry, that was the 134.50 level. Just finding it capped at the top by that 20 SMA, which is at the 135 level. And then we found support on the 50 SMA. So it's just trading caught between those two. But the upward trend does actually, for now, stay intact, even though we are at the bottom of that rising channel, right at the lower band of that rising channel. So if we do get a slightly dovish sounding commentary from the Bank of England, if we get a stronger US dollar because of commentary from Federal Reserve Chair Jerome Powell, who pushes back on rate cuts, then we could see the pair test once again that 134.50. Hawkish commentary from the Bank of England, and less so from the Federal Reserve, could see a retest of the 136 level on the upside. Just finally, let's have a quick talk about oil. We can't seem to get away from oil right now. Interestingly, oil has fallen. So after spiking to a fresh 5-month high, it's actually down 1% on the day, back below 73. Still holding above this 72 level here, which was the April high. And we're basically, we're not seeing oil disruption. We're not seeing disruption oil supply, which is helping calm the markets a little bit. We're not seeing a closure of the Strait of Hormuz, which is also helping to calm concerns. And think about it, given that the Iran uses that strait for most of its oil exports, it would almost be shooting itself in the foot if it decided to hold blockade there. So we're just seeing sort of oil prices come back down after that shooting higher earlier today. Again, very much going to be headline driven. Any headlines surrounding the Middle East could either push the price higher or bring it lower. We are in overbought territory, so we're just watching for that as it comes back down. But as I said, immediate support there around the 72.50 level. That was the April high. Below there, you've got the 70 level and then the 200 SMA at 68.75. On the upside, looking for a rise above the 77. Well, now it'll be this one here, the 78.40 level, which was the high today, in order to bring $80 the barrel into focus. So I hope you liked everything that we've spoken about. And if you have, then please do give this video a like. And for more videos like this, please do subscribe.